Welcome to Shortview Trading. My name is Chris Watling, the CEO and Chief Market Strategist of Longview Economics and Shortview Trading. It's Monday, 8th of January. And if you want to trade equity markets on a 1 to 2 week basis, if you're a swing trader trading equity index futures like the S&P500, DAX, NASDAQ 100, FTSE futures, what do you need to look at? What factors drive the market on that time frame? What do you need to keep an eye on? That's what we're going to dig into in this video. Well, in terms of markets, as we know, the back end of last year was marked by a particularly strong performance by key equity markets around the globe. The S&P 500, the main US equity market, and the chart we're putting up in front of you now, rallied aggressively in November, December, up 17% from its trough in late October all the way through to the end of the year. But 2024 started very differently. It's a marked change of trend, a marked tone in the market, and in fact, pretty clear weakness across the board in the first week of 2024, the first trading week of the year. And as you can see from the weekly performance of US equity indices that we're putting up in front of you now, there was weakness across the board. All indices were down, led by the Philly SOX, the semiconductor index, down almost 6% of the week, off sharply the first 3 trading sessions of the year, and then followed in weakness terms by the NASDAQ and by the smaller mid caps, some of the high beta areas of the market, with the industrials, the Dow Jones Industrials, and the broader S&P 500, some of the better performers on the week, albeit they still closed down last week. And indeed, last week was marked by some sector rotation. We saw the Magnificent Seven underperforming, the mega cap tech stocks, which were a big feature of 2023, performing really quite poorly. Look at Apple, the chart putting up in front of you now, down almost 6% of the week. FANG stocks in aggregate down over 3%. Joining Apple, Tesla was very weak, and Google was pretty weak as well. So the rotation played out. The Dow Jones Industrials really only off mildly, and some rotation we saw in amongst the key sectors of the US equity market. But it wasn't just the US that was weak. There was some weakness in Europe, as you can see in this chart in front of you now, albeit not nearly as marked as in the States. And there was also weakness in Asian equity markets, led by China, where the challenges in the Chinese economy continue. So that was the first trading week of the year. And of course, the market saying is where week 1 goes, so goes the month, so goes the year. That in fact is not correct. That's statistically not proven. You're just as likely to be up on the year if week 1 is down as you are to be down. So where does that leave you as a 1 to 2 week swing trader of equity indices? Should you be long or short? Well, certainly if you look at a bunch of our models, they've been moving on to buy over the course of the last couple of trading sessions. Pulling up in front of you now, the S&P 500 technical scoring system. This adds together a bunch of technical indicators, scoring them, equal weighting those scores each and every day. And as you can see from the chart, it's moved from sell not so long ago, a couple of weeks ago, back on to buy as of the last couple of trading sessions. Equally, if you looked at a FANG scoring system, technical scoring system for the FANG indices, FANG equities, all equally weighted, creating a FANG index, you would see that actually that is also back on buy and has picked up the swings in the FANG stocks as a group pretty well over recent months. So short-term market timing models are starting to move on to buy, but we're still left with a key question for this equity market. Is the S&P 500 and other key equity indices consolidating their gains of the past couple of months and tracking sideways for a bit, or are they in fact rolling over into multi-month or multi-week downtrend? That's the key question. That's the critical question that gives us insights as to how to use our short-term market timing models and whether we should be buying the dips or selling the rallies. And we think of all those questions each and every day. We consider the market. We think about the models. We look at the updated models on a 1 to 2 week basis and the medium-term models as well, each and every day in the daily rag. And if you're a subscriber, it should be in your inbox by around 9 a.m. London time. But if you're interested in a free trial, please do click on the link below. We'll send you the daily rag for free for a bunch of trading sessions. All we need is your name and email address, no credit card details required. So what are we watching this week? Well, there's really 3 key themes. First of all, there's an inflation theme with US CPI coming out on Thursday and then US PPI on Friday, along with Chinese CPI. So they'll be watched closely. CPI surprised people by how fast it's been falling over recent months. The skeptics on inflation thought it would be stickier. So far, that's not proving to be the case. And of course, that's critical to the way bond yields behave, interest rate futures behave, and therefore has big knock-on impacts for the equity market. So that's one key theme. Second key theme we'll be watching pretty closely is some other bits and pieces of data. There's NFIB data out of the US. That's the Small Business Optimism Survey. This is very important. This is out in the first half of this week. And then on top of that, we got some Chinese total social financing, their monthly lending data, probably on Wednesday, although one never really knows. This is a critical data point for China. Tells you how much money they're putting into the system, how much stimulus effectively is coming in through that lending channel. And then finally, the third key theme is US earnings start in earnest on Friday with the big major banks, JP Morgan, Wells Fargo and others reporting this Friday their fourth quarter earnings. That kickstarts the fourth quarter earnings season in earnest, which will get going from Friday into and come out with those earnings coming out over the course of the next few weeks. So that's it from us. That's your morning market hit for Monday, 8th of January. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button and like and share on social media, or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.